and welcome to this special show. I'm Ritu Singh. Now, it's a watershed moment for India's financial sector, with Japan's financial giant MUFG set to acquire a 20% stake in Shriram Finance for about $4.4 billion through a preferential allotment. Importantly, MUFG has not ruled out raising its stake further over a period of time, and as part of the deal, it will also get the right to appoint 2 nominee directors to the Shriram Finance board. The shares are going to be issued at 840.93 apiece, with MUFG picking up 47.1 crore new shares, valuing the company at a post-money price to book of around 1.9 times. This is subject to regulatory approvals, but once done, it will be the largest foreign direct investment ever in India's financial services sector, and also the biggest investment from Japan into India. The rationale is clearly growth-led for Shriram Finance. This capital will strengthen the balance sheet, improve funding access and credit perception, and provide firepower to scale its lending book. The partnership also opens up new business opportunities through MUFG's global and India-linked customer network. And for MUFG, the deal creates a strong platform in India's MSME and retail finance space. Also, if you look at the bigger picture, 2025 is the year global capital went all in on Indian financials. Nearly $11.8 billion has flowed into Indian banks and NBFCs just this year, counting this latest deal. And this is not hot money we're talking about. It is sticky, strategic capital with both seats, lock-ins and governance influence. With Emirates NBD's 60% takeover of RBL Bank, IHC's promoter-level bet on Sammaan Capital, to SMBC becoming the largest foreign shareholder in Yes Bank, foreign investors are taking real control and real influence. And at the center of this is the MUFG Shriram Finance deal. Our focus today, the biggest check and the clearest signal of the times that we're in today. To discuss the significance of the deal and this moment in India's financial sector, joining us now are Rajeshwar Rao, former RBI Deputy Governor, who approved several landmark foreign investments in Indian financials, whether that was Emirates, RBL, or Yes Bank SMBC, and Rajnish Kumar, who is a former chairman of the country's largest bank, State Bank of India, together bringing a rare regulator plus banker perspective on this important deal. Gentlemen, thank you so much for your time here today. Mr. Rao, from a regulator's lens, how significant a moment is this for the financial sector?
No, I think it's quite an important landmark, I would say, that and the proposal is actually a very positive development for the Indian financial sector. It reflects largely the confidence the foreign investors have in India's growth story and the financial sector's growth potential, as well as kind of reflects the strength and resilience of the financial sector. Having said that, I think a key challenge for the financial sector today is the ability to raise capital for growth. And having the right kind of investor is a key factor here. And so this kind of deal, I think, is a very positive signal for the financial sector going forward.
All right. Mr. Rajnish Kumar, from a banking standpoint, Shriram Finance now has MUFG's might behind it, the kind of capital and credit that come with it. How transformative is it going to be for their balance sheet, for their funding costs? How will it fuel their growth from here on?
Yeah, we have to realize that Shriram Finance is one of the largest NBFCs and top-rated company. And that's why it makes it an attractive investment for any investor, be it domestic capital or foreign capital. And we know that Japanese investors are looking at opportunities in India. And that is where the Yes Bank deal and now this deal has come through. And the financial services business, we know, is a capital-intensive business. So I think this is a very positive development for the company as well as the sector. And it shows the confidence not only in the banking and financial sector, but also the Indian economy. And the financial sector and the economy, they go hand in hand. If economy is performing well, the chances are that the sector will perform well. And for economy to perform well, it's important that we have a very sound banking and financial system.
Yeah, well, the system is very much a mirror of the economy. But Mr. Kumar, just to continue with that, on what MUFG actually brings to the table beyond money? I mean, does a global bank owning a large minority stake change how Shriram is going to be run day to day, especially with the both seats MUFG gets?
Normally, in day-to-day operations, it doesn't impact, but alignment with an international bank, it always brings in some new ideas and new thoughts. And obviously, with 20% stake, they have asked for 2 board seats. So they bring in that international experience. And that is the advantage. But day to day, I don't think that anybody is going at the management level or CEO level. So the board level strategy and how to ensure that what they have invested, the return on equity, if it can be improved, which is not bad currently, around 17%, but Bajaj Finance as a benchmark, their ROE is around 20% plus. So there is a scope for improvement in ROE. There is a scope for improving the asset quality further. This has a history because Shriram Transport Finance, it got merged in 2022. And they had problems of asset quality.
Sure, yes.
But I think the company has been able to put behind the past and performing well and with a diversified portfolio and improvement in asset quality and return on equity. That's why the size and all these factors make it an attractive bank.
Absolutely. Mr. Rajeshwar Rao, as we were talking earlier, the deal at 20% stops well short of control, but it is large enough to matter. And now you have MUFG's comments that they're not ruling out a further hike. How would the regulator look at this proposal from your vantage point as an insider? What are the non-negotiable red lines that, if crossed, would have stopped deals like this?
No, I think if you look at it holistically, the statutory framework and the limits, the FDI limits, of course, for the NBFC sector is, I think, FDI limit is 100%. But having said that, the statutory framework limits on the bank's investments into another entity, the statutory limits for investment into foreign banks or foreign corporations, as well as the supervisory oversight, gives adequate guardrails for ensuring that these activities do not get overextended or create a instability in the system. So I think the current investment of 20% is comfortable, but going forward, we'll have to play it by the year. We have to see what is the furthest actions which the entity wants to take after having acquired this stake, how they want to plan for the future. That will have to be seen as and when they decide on that and come to the regulator for the requisite approvals.
Okay, Mr. Rao, given that you say, of course, important fact that NBFCs have allowance up to 100% FDI, less stricter than what we're seeing in terms of ownership structure for banks. Is that possibly a reason why, perhaps it was easier for RBI to sign off on a large deal like this for an NBFC, say, versus for a bank? And how should we interpret this in light of some of the deals that we've seen?
No, even for the NBFCs, I think there is a stipulation that if the shareholding crosses a certain threshold and there's a change in the directorship or ownership, the prior approval of the regulator would be required. But having said that, I think banks are on a different footing, and primarily because the bankers are trustees of public deposits and public money. So the focus has been on having a very well diversified ownership structure as far as the banks are concerned. But the current dispensation does permit any individual entity to go up to 26%. If it's a financial sector entity, the limit is 15%, but a higher threshold can be considered by the regulator based on the circumstances of the case. But 26% becomes an outer limit, which is a hard limit set under the the statutory framework, the Banking Regulation Act. So banks will be constrained.
Sure. Mr. Rajnish Kumar, we're running out of time. Very briefly, big players coming in with big checks. Do you think a shake-up of the financial sector of the NBFC industry is in order?
We can't call it a shake-up. We can only say that the future of the financial sector seems to be very bright, which is attracting foreign capital in the country. So there is nothing like a
no consolidation ahead?
Consolidation is a different subject, and consolidation of banks and what the government does with the banks, that is a different subject. So consolidation also has to be guided by whether it improves the efficiency as a result of that company. And this has been proved time and again that scale does not necessarily mean that you are very efficient. So it will all depend upon what the objective of any consolidation is. But it should be that we have a sound, efficient financial system.
Okay, finally, Mr. Rajeshwar Rao, the fact that we've seen several foreign banks struggle to make inroads in India, often shutting shop because of, regulatory constraints, huge capital requirements. Do you see strategic investments like MUFG in Shriram, for instance, as a more effective way for foreign banks to get a foothold in the Indian market? Is that the message the regulator is trying to send?
No, I think we'll have to, play it by the ear, I would say. This looks like a different diversification strategy compared to what the other foreign banks have attempted previously. So we'll have to see how successful this approach is. And if it is a very successful approach, perhaps it could set the template in the times to come. So we'll have to see how it pans out. We can't really make a judgment call at this time.
All right, we'll leave it at that. Mr. Rajeshwar Rao and Mr. Rajnish Kumar, both of you, thank you very much for your invaluable inputs. On that note, we're going to slip into a short break, but don't go anywhere. When we return, we will speak with another veteran banker and advisor to several companies, Mr. Keki Mistry, so stay tuned. Welcome back to our special show, The Newsmaker. We're now joined by veteran banker and advisor to several companies, Mr. Keki Mistry. Mr. Mistry, thanks for your time here and, welcome to the show. Would you classify this deal as a vote of confidence in Shriram Finance specifically or in the NBFC model for India more broadly?
I think it's a confidence on the Indian financial system. The Indian financial system represents or gives the ability of so much of growth that is possible. And therefore, you're seeing more and more foreigners taking interest in investing in India. Now, whether it's in the NBFC sector, whether it's with banks, you are seeing more and more foreign interest in investing in India.
Well, from what we saw was passive minority stakes a few years back to now, you're seeing more boardroom influence, more operational control in deals like Shriram, of course, RBL Bank, Yes Bank, etc. How significant is this shift, for the financial sector that we're seeing now?
I think it shows the confidence of the regulator, of the RBI, in the fact that they believe that the regulatory environment in India is very strong, and therefore they are open to having more foreigners invest in the equity market. I'll just give you one example of bank ownership. Now, the foreign institutional investor ownership in a bank or a foreign ownership in a bank is capped at 74%. If that was to increase theoretically to, let's say, 100%, then you would see a lot of passive money coming into the Indian equity market, passive money, and all the control in terms of how much shareholding a particular entity can have, and all of that is controlled by RBI. So you could see more money coming into India without any of the inherent risks.
But Mr. Mistry, if this kind of foreign capital continues to come at this scale, could it exert some competitive pressure on Indian lenders' margins, product pricing? How does it change the whole competitive landscape for the NBFC sector, you think?
I don't think the competitive landscape changes, in my view, because Shriram could have raised capital in any case from anywhere. It's just the fact that RBI now has extreme confidence in the regulatory framework in India, and therefore is open to foreign ownership. I don't think competitive landscape changes. What MUFG has done is they've invested capital into the company. Theoretically, if they had not invested capital, somebody else would have invested capital. So availability of capital is really, in my view, not such a major issue.
Okay, but speaking of regulatory comfort, what do you think has changed? I mean, from the last 5, 7, 10 years, that RBI is showing this kind of comfort with having large foreign players come in, invest, have significant control in Indian companies, in specifically NBFCs. You think it's just applying the same principles it had, just that today's system perhaps looks stronger?
I think the system, one is the system is strong. To the growth the growth opportunity that exists in India and the financial sector is so enormous that foreign capital coming into India would be welcome, with all the controls, all the checks and barriers which are already in place, and that RBI, I'm sure, will have in place. It does not, in my view, change any of the day-to-day dynamics of running business. It just shows the attractiveness of the financial sector and the NBFC sector to foreign investors for investing in India. Where else in the world do you see this kind of a growth opportunity? We have a very strong government which is encouraging growth, and we have a very strong regulatory environment in India which encourages more foreigners to come in and put capital into India.
But Mr. Mistry, let's talk about the day-to-day dynamics and how those change briefly, because, from your vantage point, having run a large NBFC, specifically for someone like Shriram Finance, how does this amount of money, change the growth strategy, market positioning? How do you think life changes for them?
Look, I think it's a great opportunity for Shriram that they got a partner like MUFG, MGFC. MUFG is a great partner. Japanese banks are wonderful banks to work with. We in HDFC used to work with MUFG. They used to be part of the bankers who used to raise funding for us from overseas. So great people to work with. It just means more the ability to raise the capital that they require. They've now got from MUFG. Their growth they'll be able to accelerate their growth a little bit. I don't think the competitive environment changes because availability of money in India at the moment is not such a constraint. Now, we are not privy to all the small details of, what the deal means in terms of sharing of knowledge or sharing of information, anything of that sort. As far as MUFG is concerned, we are not privy to that. More capital coming into the company will give them the confidence to leverage more and grow faster. But all I'm saying is that if this capital had not come, they would have probably raised capital from other domestic investors. But the fact that MUFG, which is a well-reputed bank, has put capital into Shriram is a tick of confidence to the Shriram group.
Well, then, Mr. Mistry, let me finally ask you then, big players coming into India, bigger money coming into India. Do you expect a shakeout for the NBFC sector? Do you expect more such deals? Do you expect some consolidation to happen in this space?
Well, I don't think there'll be I don't think this means consolidation. Consolidation opportunities were always there and will continue to be there, and I don't think this changes that dynamic. But the fact that someone like MUFG has put capital into the company is a boost to the Shriram Group. It shows confidence in the Shriram Group, confidence in the regulatory environment, confidence in the growth opportunities that MUFG sees in India. All of that is a big positive. I don't think M&A transactions are going to change significantly because foreign capital is available.
All right, we'll leave it at that. Thank you so much for your time, Mr. Mistry, and taking us through some of the nuances of the significance of this deal. Thank you so much.
Thank you. Thank you. Bye-bye.